Good morning, everyone, and welcome to episode, can you believe it, episode 12 of The Old and the Restless, and where our audience is primarily, but not exclusively, Lansdowne Woods, active adult senior community in Lansdowne, Virginia. But our audience is rapidly spreading to the senior realm all across America, so wherever you are in the world, if you have gray hair, welcome to episode 12 of The Old and the Restless. Now, we do have a special guest, and we're going to get into the special guest in a moment. We are recording this at the studios of the Northern Virginia Association of Realtors in Ashburn, Virginia, and due to a technical glitch at the studio, we have, as you can see, 3 people, but we only have 2 microphones. So our special guest, who we will be introducing in a moment, and I know you're waiting with bated breath, we will introduce him in a moment. He's got a microphone. Phyllis and I are sharing a microphone. So, without further ado, because this will be on YouTube, and we count on your input to give us guidance for future episodes. So, be sure to hit the like button and the subscribe so that you'll be notified when the next video drops. So,
and because he's old and I'm restless, I'm holding the mic.
That's right. I'm old, she's restless, she's got the mic. So the good news is she's got the mic. You're not going to have to hear much of me. However, we're going to introduce our special guest before we get into content. And the special guest is Patrick Settle with First Heritage Mortgage. And we'll get into specific loan programs, but you wanted to ask Patrick a couple introductory questions. So you got the mic.
Okay. First of all, Patrick, you're with Heritage Mortgage, right?
First Heritage.
First Heritage. And how long have you been in the mortgage business?
I've been in the business since 1997. Was my first job out of college, and I've been in the business ever since.
So you're still a young guy.
Well, the grays are starting to come in.
Wait till you get white. Well, it's good to have you here.
Thank you for having me.
And you're very knowledgeable when it comes to mortgage banking. We've sent people to Patrick that are very happy with his services. So, Patrick, tell us, give us a little overall view of some of the services that you offer.
So part of my business is I teach first-time homebuyer classes to educate the public. I think that's very important for someone going through the buying process. And when I take on a new client, I try to give them education to catch them up to speed and all the programs that they have access to available.
And I will tell you, I have attended Patrick's classes, and Andy has attended the class, and they are excellent classes. You really learn a lot in there. And all of the students, when I was in there, were very alert and asked questions, and a lot of positive things came out from that class. When is your next one, by the way?
Actually have one tonight and tomorrow.
Oh, wow. So current.
Yes, yes. I typically do them once a week in my office in Fairfax.
And where is your office?
It's off Raynham Hills Road in Fairfax, 11325.
Okay.
Yeah.
Easy to find.
Yeah. So I wasn't going to speak much because we're sharing the mic, but Patrick is speaking about first-time homebuyer classes. And some of you in the senior realm might be wondering, well, how is a first-time homebuyer class relevant to me? Because, so like intuitively, we would think that a first-time homebuyer class is for first-time homebuyers. But if you can speak to the expanded definition of what exactly a first-time homebuyer is, because you can be 80, have owned a home before, and still be a first-time homebuyer.
That's right. So a first-time home buyer is someone that hasn't owned a home in the last 3 years. So you could be renting and have not owned a home in the last 3 years and be considered a first-time home buyer and get access to all the first-time home buyer programs. Also, too, it's you haven't owned a primary residence in the last 3 years. So you might own an investment property. They don't look at that as being you haven't owned a primary residence in the last 3 years. So I've had people before that have an investment property but are currently renting where they live as a primary residence.
So as an example.
That's something unique to Virginia housing and to the housing programs.
Unique to Virginia housing.
Correct.
Okay. So somebody could be renting for 3 years in Lansdowne Woods,
Yeah.
but if they moved to Lansdowne Woods from New York, and if they're renting out the house in New York, and they've been renting it out for 3 years and renting here for 3 years, they would still be a first-time homebuyer.
That is correct.
What is the biggest advantage of getting a first-time home buyer loan?
I mean, I would say grants. There's grants that you could get through Virginia Housing. The counties have grants that you could get, and there's federal grants that you can get. So if all the stars aligned and all of them were available, you could get assistance from the state, county, and federal. If the federal and the county program grants aren't available, Virginia Housing is always there for grant. They don't run out.
Okay, so it's basically, is it safe to say free money?
It's free money. The grant money is free money. You don't have to pay it back.
Okay.
And that would be for both down payment assistance and or a closing cost grant?
For Virginia Housing, yes.
Okay.
Yes. The counties have different guidelines with their assistance, but for Virginia Housing, the grant money, you don't have to pay it back. There's no caveat to it. You could buy a house and then move out in a year. It doesn't matter. It's free money.
And is there an income limit?
There is, and let me look on my trusty phone right here.
What would we do without our phones?
What would we do without Patrick Settles as a lender?
That too.
So for 3 or more people in a household, the income can't exceed 174. For 2 or fewer, the income can't exceed 148. And that's for the grant.
Okay,
That's for the grant. Let's say they make too much money for the grant, they could get no money down through what's called a plus second mortgage, a down payment assistant loan that has a higher income threshold. So for 2 or fewer people, it's 186 and below. For 3 or more, it's 217 and below. So it really hits a lot of income brackets for the assistance, is what I find.
Okay, and what's the interest rate on that?
With SPARC or without SPARC? Should we talk about SPARC?
Yeah, let's talk about SPARC.
Okay.
SPARC is an acronym, and it is, well, I'll let you explain the benefit of SPARC.
Okay, so SPARC is a interest rate reduction program that is funded by Virginia Housing. So when it's available, the interest rate reduction can be used to lower a Virginia housing rate by 1%. So it gets you at or below market value when SPARC is available.
And that's not always available though, is
It's
it?
not always available. So I'm being told it should be available in July. So to really take advantage of it, you need to take homebuyer education, and you need to do HUD counseling with the HUD counselor, which is like a 30-minute Zoom call to go over your budget.
And from my understanding, the lenders require first-time home buyers to attend your educational meetings, is that right?
For Virginia Housing, they have to do homebuyer education
Yes.
and get a certificate to take advantage of the program.
Okay.
And to zero in on something that you said, if somebody is renting in Lansdowne Woods, wants to buy in Lansdowne Woods, and doesn't have the cash for a down payment, depending on their income and other aspects of their purchase, they could actually do no money down and not be a veteran?
Correct. Through a down payment, it's called a plus second mortgage, where you can get 4.5%. For 3% goes towards the down payment, 1.5% goes towards closing costs. So if closing costs are 3%, maybe they would have to bring 1.5% to closing. Or if the seller helps contribute, depending on how the contract's negotiated, then the perfect world would be not much down, maybe the earnest money.
And how does credit rating come into play?
So 620 is the minimum credit score for Virginia Housing.
All right.
One of the things we spoke about off camera, and you said that you weren't really sure this might apply or might not apply to Lansdowne Woods.
Yeah.
If somebody cannot buy on their own, but they have an adult child or an adult grandchild, then technically they could buy jointly, and it's called a non-occupant co-borrower.
Correct.
Is that right?
Yes.
So if you had a hypothetical condo in Lansdowne Woods for $400K, and if the senior had 20% down but could not qualify for the loan, so in this hypothetical situation,
You're
okay,
gonna make me get out my calculator.
okay, so 20% down on 400 is 80, and let's say
Yeah.
the senior has 80 in an IRA or something, but they cannot qualify based on income because they're living off Social Security.
Yeah.
They could, for example, in this hypothetical,
Yeah.
and you would have to look at the numbers, it's a
Yeah.
hypothetical,
Yeah.
bring in an adult child or an adult grandchild, or for that matter, anyone else as a non-occupant co-borrower and buy the condo in Lansdowne Woods jointly.
Correct. And it would still be considered a primary residence. The non-occupant's income and the borrower's income would be used to qualify for the loan, and the non-occupant's debt and the borrower's debt. So it allows the pricing to be considered a primary residence, even though the non-occupant is not going to be living in the property.
One of the things that happens all the time in Lansdowne Woods, because we're all seniors there, and people would say, well, what happens in this case when I die? So on a non-occupant co-borrower, you have a Lansdowne Woods resident living in the condo, and let's say they're in their 70s, and the adult child, who's the non-occupant co-borrower, is significantly younger. When the resident passes, does the property pass according to the will or the trust to the adult child co-borrower?
So the non-occupant would be on title,
Would
they
be
would
on
be on the
title.
loan. So as long as payments are still being made, the mortgage company they're not, or the servicer's not gonna do anything. It's, but the non-occupant would be on title to the property. So they
And
would
it
still
de-
have ownership
Yeah,
of
it
the
depends
property.
on how they take title,
That's correct,
joint tenants or,
Yeah.
and that's up to the attorney,
yeah,
right?
Yeah, well, actually, so that's another interesting aspect.
yeah.
If you're doing a non-occupant co-borrower, can the property be in a trust?
Yes,
Okay,
yes.
all right. Another thing that we had spoken about with respect to Virginia Housing. Well, first, Virginia Housing, and we referred to it several times, is an agency of the Commonwealth of Virginia, is that right?
Correct. So a Virginia housing loan can be done either as conventional financing, FHA financing, VA, or USDA. So Virginia housing is just a vehicle that is used in those type of mortgage programs.
Okay.
So you can be a veteran. So a lot of people don't know that veterans can take advantage of Virginia housing. So I would figure out, do we do conventional, FHA, or VA? And I show the different scenarios for each of those programs with Virginia housing.
Yeah, so one of the things that we have run into, by the way, is that at least at the moment, Lansdowne Woods condos are approved for FHA and VA loans. And not all condos in Virginia or nationally are FHA and VA approved.
That is true.
But Lansdowne Woods is. And so that if you're a veteran living in Lansdowne Woods, and this is not just disabled veterans, anybody who basically served in the U.S. military and had an honorable discharge with, what do you call it, a DD-214 form, or
Yeah.
if they had an honorable discharge, then they can get a VA loan and purchase in Lansdowne Woods.
Well,
No
it's
money now?
Subject to
Correct.
certain requirements, right?
Yeah, so we would get the certificate of eligibility, and if they have any disability from the VA, then they don't have to pay the VA funding fee that's typically financed into the loan amount. So we run across that a lot. So the loan amount, if they're exempt from the funding fee, the loan amount will be the sales price if they don't put any money down.
One of the things I had heard about, and it's almost incredible to me, but you can confirm this, that if somebody is 100% disabled VA, that they will know. But there are people who have partial disabilities with VA and they don't even know they have a partial. Do you run into that?
As far as them trying to get benefits from the VA,
Yeah,
I mean, we just pulled a certificate of eligibility. If they have the disability, they don't have the funding fee. But one thing that I've come across recently is, let's say they're 100% disabled, they can petition to the county to be exempt from real estate taxes.
Oh,
okay,
So-
oh, yeah.
Which,
Real estate taxes
Yeah.
can be very high.
yes.
so that could save big time on the monthly payment.
Right.
So I have a client right now who he petitioned the county and he doesn't have to pay real estate taxes. And it also doesn't have to pay personal property taxes.
Hmm.
So, and we should point out, by the way, while you're speaking about what we'll call interesting buyer assistance programs, you also do what I'll call plain old regular vanilla mortgage loans.
Correct.
Okay.
Correct.
Yes. And by plain old regular vanilla, I'll say 20% down and you get a regular mortgage.
That's right.
Okay, that would regular vanilla mortgage.
Yes.
As opposed to somebody who needs assistance from a state or federal program in order to buy.
That's right. I can do everything A to Z mortgage.
And,
So,
and the conventional mortgages that we're talking about, the interest rates typically are a little bit higher.
typically.
And how are interest rates moving today? Hard to say, I know, but which hour do you want to talk
Yeah.
about, right?
I mean, the best interest rates in the market are veterans. The VA rate is the best rate in the market. Next would probably be FHA and then conventional. So each program kind of has their pros and cons. I mean, VA is probably the best, most liberal with guidelines. For a conventional loan, the mortgage insurance is a lot less compared to FHA, even though the rate's slightly higher. So sometimes it might make more sense to go conventional compared to FHA.
And
Depending.
what are the difference in advantages? Like conventional, you avoid the mortgage premium by putting 20% down.
That's right.
FHA, you have to pay it regardless.
That's right. So FHA allows for less than perfect credit, and they allow for higher debt to income ratios. So FHA takes on more risk, so that's why they have the mortgage insurance for the life of the loan. But the mortgage insurance goes down as the loan amount goes down.
Oh,
So
on FHA?
on FHA.
I didn't
So
realize that.
sometimes with FHA, that might be like a starter loan, and then once someone hits 20% equity, we could refinance them out of FHA into conventional.
And what about assumable loans?
I was about to ask about assumability.
So VA loans are assumable, where you would assume someone's rate and terms. So typically, it would be someone that has cash that they can assume their loan amount and assume their rate and their terms. Typically, first-time homebuyers are not assuming an assumable loan because they just don't have the money for it.
Yeah.
Do they allow a second trust in order to assume a loan? Is that
Second
possible?
trust.
Where
It
they don't
has-
have the cash
Yeah.
between the purchase price and the loan amount. Will a second trust be allowed to cover some of that?
I don't think so.
No.
Because that would be another lien on the property.
Right.
They would have to get other means to
Okay.
pay for it.
So on the subject of an assumable mortgage, and I'm very opinionated on this because,
Yes.
and many of the people watching will say, well, what is an assumable mortgage and why would you ever want one? So historically, until very recently, we have been in a declining interest rate environment. But we might, maybe, Lord help us all, be going into an increasing mortgage interest rate environment. So if, for example, make sure I say this right, you have a 6% assumable FHA or VA loan, and interest rates rise to 10%.
Oh, wow.
Right, I mean,
Yeah, we
This is-
don't want that.
we don't want that, but it's a hypothetical to illustrate why would anybody want to assume an assumable loan. If it's 6% originated today and rates go up to 10%, the buyer down the road could take over that 6% loan at 6% and not pay the going rate at that time in this hypothetical of 10%.
That's
Well,
correct.
and we currently have some loans out there, I think at 2.5% and 3% that were obtained years ago.
Yes.
A few years ago. So if you can find one of those to assume, we'll be.
Yeah, and so that's another, we'll get back to Patrick.
Okay.
Forgive my editorial on this.
Yeah.
But it's possible for us, so that you watching should contact us at this phone number. We can actually search for properties that have, for example, a 3.5% assumable loan. Many of those homeowners have no clue that the interest rate that they're sitting on is assumable. And when you contact them, you just have to explain that they have a very interesting asset in that mortgage with a 3.5%, for example, assumable loan. Before we run out of time, and one of the things that, well, two things before we run out of time. First, Patrick's information and also flyers that you have on the various programs that we're discussing will be on YouTube linked below the video, so that you'll be able to get Patrick's contact information and also information about the programs that Patrick's speaking about by clicking on the link on the YouTube video, and you'll be able to download and see that.
And Andy, don't forget, we have a newsletter coming out
Oh, we
this
do.
week.
Yes.
And Patrick's information is on the second page of that newsletter.
That's correct. We do have a newsletter you will see in your mailboxes by the time you see this video, and another one coming out thereafter featuring Mr. Settle and his programs. But
you.
on YouTube, you'll be able to click the link and see the flyer. But before we run out of time, there is a program that is new. It is for Fairfax County residents. So granted, if you're in Lansdowne Woods, you can't use this yourself as a Loudoun County resident. But you likely know people in Fairfax
You
County.
may have grandchildren, or in my case, I have a daughter in Fairfax
Well, there you go.
and a grandson.
And this is something that they might use. I'll let you get into this. It is a $50,000 loan with no payments required until the property is sold. And essentially, the county is assisting homebuyers in Fairfax County with a $50,000 loan.
All right, you're doing his job for him.
Okay, tell us all about it, Pat.
So it's a $50,000 loan, no payments, no interest, and when the loan is paid off, there's an equity share agreement where they would have to pay Fairfax County the $50,000 plus a percentage of the equity.
Okay.
So the equity percentage is based on the sales price and the amount of the loan. That gives a percentage. So when they sell, they're going to look at how much equity they got from when they bought to when they sold, and that's how it's calculated. So in addition to the $50,000, you can get a Virginia housing grant to go with the $50,000. So let's say someone buys a $400,000 property, they could get $8,000 plus the $50,000. So it's a first-time homebuyer program, and yeah, I mean.
I remember back in the 80s, equity share was a big thing. In fact, my parents did an equity share on a couple of properties back then. So, but now it's an equity share with the county, right?
With the county.
Okay.
And the Virginia housing grant is separate, but that can be stacked on top of the Fairfax County down payment assistant loan. So.
Now, I think you said that there is a 4-month period where you reserve the money for the buyer? How does that work?
Oh yeah, let's talk about that. So to get access to the money money has to be reserved, and then the client has 4 months to find a house. Versus most of the other grants, it's like a first come, first serve. Virginia housing's not that way, but the money's reserved and the clock starts. You have 4 months to find the house. If you don't find the house in 4 months, you just get taken off the list. They do allow extensions, but clock starts 4 months.
So in order to reserve it, they just have to talk to you and get qualified.
So yep. So I would they would fill out an application. I would pre-approve them. There's an application for Fairfax. We would send that to Fairfax, and then they would send out a certificate to us and the client to reserve the funds. So if, let's say they don't find a house in 4 months or don't find a house, there's no loss, like nothing happens. I've had that question come up a lot.
Now, tell me about income qualification. Is there, I'm sure there must be a
Let's go
ceiling
to
on
let's
that.
go to my trusty phone again.
Okay. Because I'm hoping, Bridget and Marshall, are you listening?
Okay, so for a one-person household, the income can't exceed $91,750. For a two-person household, it's $104,900. Four-person, so it goes all the way up to 8 people, which is $173,50. So increments of 1 to 8.
All right, and so at that income level, what would they qualify for a sales price?
I would say, let's say someone has no car payment, not much debt. I would say probably somewhere in the 400s that they would qualify for, maybe closer to 5, but somewhere in the 4 to 5 range.
Okay. And is that for single family or condo? You know, if it's a condo, you got condo fees.
I would say a condo or townhouse, probably not a single family home. Unless, can you guys find a single family home?
No, not in Fairfax County. No
I
way.
wish.
It's hard to even find a condo in Fairfax
Yeah.
County, but then you got the condo fee. So
That's
does that
right.
come into?
I would say it could, if it's a
Payment.
condo of $250 or if the condo fee is $800, like that's something I would have to figure out to determine
Yeah.
what they'd qualify for.
Okay.
Condos get tricky sometimes.
Yeah.
So you mentioned if somebody has no car payment, and I know that you are a mortgage loan officer and
Yes.
not a financial planner or a debt counselor.
Yeah.
But if somebody wants to buy a house and they also want to buy a car, is it a fair statement that they should speak to you first and maybe plan on buying the car
Don't buy the
after they go to closing on the house and not before?
Absolutely, especially with some of the car payments I see these days.
Mm-hmm.
Yeah.
We've gotten our 5-minute warning.
Oh, we've gotten our 5-minute warning. Okay. So, one question that we haven't asked, tell us a little bit about First Heritage Mortgage.
First Heritage Mortgage has been around since, I believe, 1998. They are, if you guys have heard of Stanley Martin,
Of course.
we are the mortgage company for Stanley Martin. In addition to the loan officers that work for First Heritage, we go out and get other business in addition to the projects that we get from Stanley Martin.
Okay. For the people in our audience who have actually stayed with us because of this fascinating, engrossing topic we've had, we need to close by, number 1, if you haven't already, hit the like button. Also, subscribe to our YouTube channel, The Old and the Restless, because I'm old and
I'm restless.
so that you can be alerted when our exciting content next hits. And we're going to be talking about Amazon and more data centers and the purchase by Amazon of the George Washington University campus. And
That's in our next newsletter.
yes, so we have a lot to talk about, so be sure that you hit the like button and also subscribe. And again, Patrick will have flyers that will explain not only how to contact him, but about the programs we've discussed. The Fairfax County program, and also Virginia Housing, and also the non-occupant, the co-borrower.
Yeah, the co-borrow, VA, FHA.
Do you have a VA flyer too?
I certainly do.
Okay, all of those flyers will be linked as PDFs on the YouTube channel so that you can easily contact Patrick. And the other thing before we sign off, and this is really important, Patrick spoke about debt, and that if you're planning on buying a car, especially with some of the car payments that you've